Preparing for Audit Associate at KPMG interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like and share, and drop a topic request in the comments. Question 1. Why do you want to work as an Audit Associate at KPMG? I want KPMG because audit is a strong foundation for understanding how businesses actually operate, and KPMG offers that at scale. As an audit associate, I would work with complex clients, learn from experienced seniors, and build discipline around evidence, controls, and accounting standards. I also like KPMG's emphasis on integrity, teamwork, and quality. My goal is to become technically strong while adding value to teams during planning, fieldwork, and completion. While answering, focus on KPMG's audit quality, client exposure, structured learning, team culture, and your motivation to build technical accounting, controls, and professional judgment skills early in your career. Question 2. Walk me through what an external audit is and why it matters. An external audit provides independent assurance that financial statements are fairly presented in accordance with the relevant accounting framework. It matters because investors, lenders, regulators, and management rely on credible financial information. The auditor does not guarantee perfection. The objective is reasonable assurance that the statements are free from material misstatement, whether caused by error or fraud. That requires risk assessment, testing controls or substantive procedures, evidence evaluation, and clear reporting. Make sure to cover the purpose of an independent audit, reasonable assurance, financial statement assertions, audit evidence, stakeholder confidence, and the difference between detecting material misstatement and guaranteeing accuracy. Question 3. What are the main phases of an audit engagement? I think of an audit in 4 broad phases. First is acceptance and planning, where we understand the client, independence, scope, risks, and materiality. Second is risk assessment and controls work, including process walkthroughs and identifying key controls. Third is execution, where we perform substantive tests, analytical procedures, and sampling. Finally, completion includes evaluating misstatements, reviewing disclosures, obtaining management representations, clearing review notes, and issuing the audit report. In your answer, talk about client acceptance, planning, risk assessment, materiality, control understanding, substantive testing, review, completion procedures, management representation, and issuance of the audit opinion. Question 4. How would you explain materiality to a non-accounting client? Materiality is about whether an error is large or important enough to influence a user's decision. For example, a $10,000 error may be immaterial for a multinational company, but material for a small business. Auditors set materiality during planning using benchmarks like profit, revenue, or assets, then use lower performance materiality for testing. It helps decide what areas need more attention, how much evidence is needed, and how misstatements are evaluated. Be sure to mention materiality as a threshold based on user decision-making, both quantitative and qualitative factors, planning materiality, performance materiality, and how it drives audit scope. Question 5. What is audit risk, and what are its components? Audit risk is the risk that an auditor issues an inappropriate opinion when the financial statements are materially misstated. It has 3 components: inherent risk, control risk, and detection risk. Inherent risk comes from the nature of the account or industry. Control risk is the chance internal controls fail to prevent or detect misstatements. Detection risk is the risk our procedures miss them. When inherent or control risk is higher, we reduce detection risk through stronger audit work. While answering, focus on inherent risk, control risk, detection risk, the audit risk model, and how auditors respond with more procedures, larger samples, experienced staff, or revised testing approaches. Question 6. How do you approach testing revenue in an audit? Revenue is often a significant risk area, so I would start by understanding the client's revenue streams, contracts, billing process, and recognition policy. Then I would link testing to assertions such as occurrence, accuracy, cutoff, and completeness. Procedures could include inspecting customer contracts, agreeing invoices to delivery evidence, testing cutoff around year-end, performing analytical procedures, and reconciling revenue to the general ledger. I would also consider whether the policy aligns with ASC 606 or International Financial Reporting Standards 15. Make sure to cover revenue as a high-risk area. Understanding revenue streams. ASC 606 or International Financial Reporting Standards 15 principles, cutoff testing, occurrence, completeness, contract review, and analytical procedures. Question 7. What is the difference between a walkthrough and a test of controls? A walkthrough helps the auditor understand and confirm how a process works from initiation to recording. For example, I might trace one purchase order through approval, receipt, invoice matching, and posting. That tells me whether the control is designed and implemented. A test of controls goes further by testing whether the control operated effectively over a period, usually using samples. Walkthroughs support risk assessment. Control tests support reliance on controls. In your answer, distinguish understanding a process from testing operating effectiveness. Mention one transaction tracing, control design, implementation, sample-based testing, evidence, and frequency of control operation. Question 8. If a client cannot provide support for a selected audit sample, what would you do? I would first clarify exactly what support is missing and ask the client whether alternative evidence exists, such as a contract, bank statement, delivery note, or system report. I would not ignore the exception or pressure the client. I would document the issue, inform the senior, and understand whether it is isolated or indicates a broader problem. Depending on the response, we may expand the sample, perform alternative procedures, or evaluate a potential misstatement. Be sure to mention staying professional, asking for alternative evidence, documenting the issue, informing the senior, evaluating exceptions, considering sample expansion, and assessing possible control or substantive implications. Question 9. How would you test accounts receivable and the allowance for doubtful accounts? For accounts receivable, I would test existence mainly through customer confirmations or subsequent cash receipts. I would reconcile the receivables listing to the general ledger and select samples based on risk and size. For the allowance, I would review the aging schedule, historical collection trends, write-offs, customer-specific issues, and management's methodology. Because the allowance is an estimate, I would challenge assumptions, compare them to evidence, and assess whether the reserve is reasonable. While answering, focus on existence through confirmations, subsequent cash receipts, aging analysis, collectability, management estimates, historical write-offs, specific customer risk, and professional skepticism around assumptions. Question 10. What are financial statement assertions, and why are they important? Assertions are management's implicit claims about the financial statements. For example, when inventory is recorded, management is asserting it exists, is owned by the company, is complete, and is valued properly. They matter because audit procedures are designed around them. If the risk is overstatement, we focus on existence and valuation. If the risk is understatement, we focus on completeness. Assertions turn broad audit objectives into targeted testing. Make sure to cover key assertions for balances, transactions, and disclosures, including existence, completeness, accuracy, cutoff, valuation, rights and obligations, and how assertions guide audit procedures. Question 11. Tell me about a time you worked under pressure or with a tight deadline. During a university project, my team had to submit a financial analysis presentation while 2 members became unavailable near the deadline. I reorganized the work, split the remaining tasks, and created a short tracker showing owner, status, and due time. I took the valuation section and reviewed the final numbers before submission. We delivered on time and received strong feedback. That experience taught me to stay calm, communicate early, and protect quality under pressure. In your answer, use the STAR format. Show prioritization, communication, ownership, accuracy under time pressure, and connect the experience to audit busy season and team deliverables. Question 12. How would you handle a disagreement with a senior associate or manager? I would start by assuming positive intent and asking clarifying questions to understand their reasoning. If I still disagreed, I would explain my view using the audit evidence, accounting guidance, or work paper facts, rather than making it personal. As a junior, I know I have a lot to learn, so I would be open to feedback. If the issue affected audit quality or independence, I would escalate respectfully through the proper team channels. Be sure to mention respect, listening first, using evidence, asking clarifying questions, escalating appropriately if needed, and showing coachability without blindly accepting something you believe is incorrect. Question 13. What is professional skepticism, and how would you apply it as a junior auditor? Professional skepticism means maintaining a questioning mindset and not accepting information at face value without appropriate evidence. It does not mean assuming the client is dishonest. It means being alert to bias, errors, or inconsistencies. As a junior auditor, I would apply it by matching explanations to source documents, asking follow-up questions, checking unusual variances, and flagging anything that does not make sense. It is especially important for estimates, revenue, and management judgments. While answering, focus on questioning evidence, not assuming dishonesty, corroborating management explanations, identifying inconsistencies, challenging estimates, and knowing when to involve senior team members. Question 14. Explain the difference between substantive procedures and tests of controls. Tests of controls evaluate whether a client's internal controls operated effectively, such as checking whether purchase approvals occurred throughout the year. Substantive procedures directly test account balances or transactions, such as confirming receivables or vouching fixed asset additions to invoices. If controls are strong and tested successfully, the audit team may reduce some substantive work. If controls are weak, we generally perform more substantive testing to obtain sufficient appropriate evidence. Make sure to cover direct testing of balances versus testing control effectiveness when each is used, examples of both, reliance strategy, and how control results influence substantive testing. Question 15. How would you audit inventory for a manufacturing client? For inventory, I would focus on existence, completeness, and valuation. At the physical count, I would observe procedures, perform test counts, trace from floor to listing and listing to floor, and note obsolete or damaged items. For valuation, I would test standard costs or actual costs, review overhead allocation, and assess lower of cost and net realizable value. I would also test cutoff around year-end and reconcile the final inventory listing to the general ledger. In your answer, mention physical inventory observation, existence, completeness, costing, lower of cost and net realizable value, obsolete inventory, cutoff, cycle counts, and reconciliation to the general ledger. Question 16. What would you do if you found a potential error in prior year audit work papers? I would not edit prior year work papers on my own. I would first understand the issue, gather the relevant facts, and determine whether it affects the current year audit. Then I would raise it promptly with the senior or manager and document what I found. The team would assess whether it was a documentation issue, an immaterial difference, or something with financial statement impact. The key is transparency, proper escalation, and protecting audit quality. Be sure to mention not changing prior files without authorization, understanding the issue, documenting facts, notifying the senior or manager, assessing current year impact, and considering restatement or carry-forward implications. Question 17. How do you stay organized when handling multiple audit sections at once? I use a simple system. List each work paper, the evidence needed, open questions, due date, and review status. I prioritize based on risk, deadlines, and what the senior needs first for review. If I am waiting on client support, I follow up clearly and keep the team updated. I also try to complete documentation as I go, not after the fact. That reduces review notes and helps the engagement move smoothly. While answering, focus on work paper tracking, deadlines, communication, prioritization by risk and review timing, asking questions early, maintaining documentation quality, and keeping seniors updated on blockers. Question 18. What is independence in audit, and why is it critical for KPMG? Independence means the auditor must be objective and free from relationships or interests that could impair judgment. It includes independence in fact and in appearance. For KPMG, This is critical because the value of an audit opinion depends on public trust. If stakeholders believe the auditor is biased, the opinion loses credibility. As an associate, I would follow independence confirmations, avoid prohibited financial interests, disclose potential conflicts, and ask before acting if unsure. Make sure to cover independence in fact and appearance, conflicts of interest, prohibited relationships, financial interests, non-audit services, public trust, regulatory expectations, and personal responsibility. Question 19. How would you respond if a client employee is slow to provide requested audit evidence? I would keep the tone professional and make the request as clear as possible, including exactly what evidence is needed, the period covered, and the deadline. If the response is delayed, I would follow up and ask whether there is a blocker or alternative support. I would also update the senior so the team can manage timing and client communication. The goal is to maintain a good relationship while ensuring we obtain sufficient appropriate evidence. In your answer, mention professionalism, clear requests, deadlines, follow-up cadence, prioritizing critical items, involving the senior when needed, maintaining relationship quality, and documenting delays or limitations. Question 20. Why should KPMG hire you for the Audit Associate role? KPMG should hire me because I bring the mindset an Audit Associate needs: strong attention to detail, curiosity, accountability, and willingness to learn quickly. I understand that early audit work requires discipline in documentation, evidence gathering, and communication with both clients and team members. I am comfortable asking questions, taking feedback, and working under deadlines. Most importantly, I care about quality and integrity, which are central to the audit profession and KPMG's reputation. Be sure to connect your accounting foundation, attention to detail, teamwork, curiosity, communication, willingness to learn, resilience during busy periods, and alignment with KPMG's quality and integrity expectations. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.